All right, folks, and welcome to our stock investment pitch on Costco. Here today we have one of our students in our analyst program, Julio, who created an investment presentation in addition to an equity research report, just showcasing the skill set that he developed in the program, soft and technical skills, to give us his perspective, his price target on Costco, and most importantly, let this be an educational experience for those of you that are seeing this so that you can understand the process, the methodologies, what are the skills or the variables to account when you're doing these type of analysis and you're looking to invest in a stock. So with that being said, let me hand it over to Julio. And Julio, we can probably start with your overall take on the stock, what is the situation of the business, and then we'll go from there into the model, the industry, so that we can get a little bit more understanding on the stock. And of course, I can open up the model and then I can do my own analysis on it as well and give two perspective on Costco. So yeah, why don't we first start, Julio, with the final slide that we have right here, putting it all together. In your $400 price target on Costco, I see you have a bullish investment thesis. So walk me through this and we'll take it from there.
Perfect. Yeah, of course. First of all, I want to thank you, Mr. Romero, for everything you've done for my and my personal and educational experience here at the program, and for every single person that's also part of this amazing program. So diving more into Costco, I think the big thing that we have to look about this company and this stock, especially in 2020, as we all know, this has been a really volatile and different and in a year we have to take things with much more thinking and logic. And that's why my investment case about Costco goes a lot into what the company can offer in terms of being a mature and solid company with a amazing membership program that has over a 90% renewal rate. I think in a year like 2020, again, we have to focus on those stocks that we know are survivors, that we know have been able to get past through financial, economic, and even health crises like the one that we're living right now. Mm-hmm. And I think Costco has a really good position for that. They've been really good at this year at expanding their e-commerce side of the business too, with key partnership with Instacart for grocery delivery. And you know, their low margins and their huge membership loyalty, I think it makes it a good stock for this kind of situation and the market environment that we're living in right now.
Okay, I see. Tell me a little bit more about their membership model, because it's quite interesting. I believe Walmart doesn't have it, only through Sam's Club. I don't think Target has a membership model as well. Maybe they do. I'm not 100% sure on that. But I know Costco do. And why are people paying a membership to go and shop at Costco? What are the benefits that they get, and why is it a unique value proposition for its customers?
Sure. As you said, it's a unique proposition. It's key for Costco's business model. Walmart actually just recently came out with their membership subscription program, which is called Walmart Plus, which is kind of like the competition for Amazon Prime, but also, of course, it's a big hit in terms of competition to Costco. But what Costco is able to offer is, again, their low margins. When we look at the retail and supermarkets industry as a whole, we're talking about typically big margins. We can see that for some products and supermarkets, and we'll get like 30, 40, even 50% margins. But Costco, they've been historically a company that one of their key aspects is that they've kept their margins really low, between 14 and 17% approximately. So that, combined with very high quality products, Costco is one of the retailers that has the most intense filters in order for you as a distributor or for you as a manufacturer to put your products in Costco, it's really, really difficult. The products go through many filters, and that's why they have so many good products.
Okay.
Also, they combine with their bulk and large quantities selling, that also helps Costco keep their costs down and also keep their prices down. So people actually, when they get that membership, they actually get like in a private club, which, shopping at Costco becomes much more of just, a membership, but much more of like an elite club. So people actually have that feeling that, wow, I can shop at Costco, so I'm gonna do it.
Interesting. Have you been to a Costco before?
I have. I'm actually a member. My family has been member for, I would say, 15 to 16 years now.
Wow.
And it's crazy. And I think another different factor that gets Costco away from the competition is, people, and this is proven through many interviews and surveys, that people, when they get in a Costco, they plan to spend, the typically the amount that they spend at a supermarket, between 100 and maybe 150, $200, and they
Yeah.
end up spending probably twice as much, because you find
Okay.
so many things at Costco that you didn't know you kind of needed, and people actually end up buying them, and yeah.
Okay. I see here this particular slide is quite interesting to me. How Costco gained a cult of following. How did they develop that? I mean, and I know you mentioned you are a member there, or your family is. So I assume that the experience is a little bit different, right? The sorting, the placement of all of their products, it's like you have to shop throughout the entire store, and you might stumble upon something that, like you said, you probably did not need it, but because they're very methodical, and they're kind of using maybe science to the entire floor and the mapping, is probably one of the reasons why they increase their sales. Like you say, you end up spending double than what you originally intended. Is that part of the reason why they've developed a cult following, or is that part of the strategy?
Yes, you're totally correct. That's from my personal opinion, I think it's part of a strategy. Actually, Costco, they released a documentary, I think it was like a year and a half ago, maybe 2 years ago, where they interview top management people, and they actually talk about how the layout for their warehouses is made in a way, when you get into a supermarket, every single aisle, it has like a map that tells you what's in what you can find that aisle. Like aisle one has cereals, two has bread, and so on.
Mm-hmm.
Costco doesn't do that. They don't give you a map. They don't give you anything. So you have to actually go through every single aisle, and that's to kind of find what you want. And that's exactly the time where you end up buying things that you didn't know you needed, because you're
Okay.
going through that aisle and you're like, oh, I'm looking for bread, and let's see that this aisle, and you actually end up buying, a pair of shoes that you didn't know you needed,
It's
because
intentional. Okay,
so
I
yeah, I
get it.
think it's a magnificent strategy that they've put together.
Okay, good. And I'm also seeing here on point number 5, this is quite interesting. So they pay uh, typically $21 per hour, double the national retail average. Is this accurate?
That's correct. That's correct. I mean, they've created not only that call for their members, but also for their workers, people that work at Costco. It doesn't matter how up in the ladder they are. They actually feel like they're in a family. They have really good healthcare and benefit for all their workers. As you saw, the minimum wage at Costco, it's twice as much as average.
Mhm.
And that they've created that group of people that feel like working at Costco is it's their life. They're interacting with their family every single day, and that translates into high quality and good customer service.
Okay. And this is quite interesting. So their grocery delivery service grew by 101% in August. Highest monthly e-commerce growth rate. Now, is all this due to the coronavirus and people staying at home and um, getting more conditioned to basically shop online?
It's interesting. I mean, all analysts are kind of like trying to find that balance between, is this e-commerce growth 100% related to the coronavirus, or is it just because this is a trend that we're seeing, like, with Amazon and every single e-commerce company, that e-commerce is growing?
Yeah.
But what's interesting is that management actually in their latest report, they said that people in the pandemic, they're looking for places where they can go and do their essential needs and follow social distancing protocols. And Costco houses are actually, because their sizes and they are so big, they are perfect places where people can keep social distancing protocols and feel safe actually while they're buying their groceries or buying whatever that they need to buy. So, I think it's a mix. Of course, 101% growth, I think, has a lot to do with the coronavirus and people staying at home. But at the same time, I think this is a trend that it's here to stay.
So in terms of the trend that here to stay, would you make the same assessment or conclusion that as there is more people leaving or flocking out of major cities, they are going to the suburbs, and obviously Costco, geographically, their location is more in suburban areas. So foot traffic at Costco stores would increase as a result of that. And also the online shopping that they're experiencing here is also a contributing factor. So primarily, the increase in population in the suburbs, it's a positive to Costco. Would you agree with that? Is that something that you've uncovered in your due diligence analysis?
Totally. I recently read a survey where, well, actually, Costco, they release monthly results about foot traffic and sales. And in their latest one, they actually said that foot traffic was up, and it has been growing this past 4 or 5 months. And one of the factors that they were talking about is exactly that. It's people, again, trying to find places where they can shop and feel safe. And they also related to that people moving to the suburban areas and areas where typically Costco puts their warehouses.
Okay. And I'm looking at the industry slide, top 100 retailer, you showing the top 10. So you have Walmart, Amazon, Kroger, and Costco. I mean, wow. Amazon half $1 trillion in global sales. And then behind them is Amazon, but Amazon is definitely a growth story, growing faster than any one of these guys right here. In terms of the competition, because this is an intense industry. This is a very competitive landscape. When you were doing your research and your due diligence, did you stumble upon any type of strategy that the CEO is implementing to get them, from 4th place maybe to number 3?
Yeah, I mean, again, I think the strategy and the proposition and the business model that Costco can offer at the moment, I think is what actually gonna, in the future, even now and in the future, is gonna differentiate them from the competition. I think, and I have to be very, I have to repeat this many times. I think their margins, it's their biggest weapon. If you look at Walmart, if you look at Amazon, if you look at any of the big names that you see in there, none of them have the margins that Costco has. And when you have such thin margins, you can offer lower prices. And I think that's what people are looking for.
Hey, I have a question here. So I know here Kroger's number 3, but they have less sales than Costco. How is this table being sorted? Is it by sales, or is it just based on other factors?
That's correct. Actually, that table, it's like an interactive table where you can change it. So on the equity research report, I actually have Costco number 3.
Number 3.
But in that actual table that we're looking at right now,
so it was in your okay. So this is the research report format, and so here you have based on sales. Okay, good. All right.
That one is merely based on sales. The other one, I was including some other factors that put Kroger up number 3.
Now, this is interesting what you mentioned. I think that's an important point about margins, because this is, one, is a very competitive industry. 2, very thin margins. What you're saying, because Costco is so efficient, they're probably able to price out any other competitors and beat them at it while still charging a membership fee because they have a strong, loyal following. So they can go to war with any one of these guys from a pricing perspective, basically a price war with, which I think is happening. And the little guys are just getting crushed. So is that a fair assessment that because they're so efficient and the strong, loyal membership following, that they can maintain low prices? And again, this is a thin margin business, therefore they can still gain a slight competitive advantage.
Yeah, you're totally correct. Actually, when we're talking about efficiency, there's this term or this concept that top retailers use. That's when you're a retailer and you're reselling products, the less time your employees touch the products, the cheaper it's gonna be for you to get product from point A to point B. And because Costco can buy products in big quantities, and they also sell them in big quantities, when you get to a Costco warehouse, you see it there in big quantities. They don't have to touch the products. It's not like a Walmart nor like a CVS or a Kroger, where they individually put each product in the aisles. No, Costco just puts everything in big packages, and people actually open the packages and then they get them. So that's efficiency. That's an incredible business model, and that's why they can keep those really thin margins.
The picture that came to mind when you said that, it's the scenes from Black Friday where everything is stored in bulks and people just run through it and then starts fighting just to break stuff and get the item that they wanted.
Correct. That's kind of like Costco every day. And the prices are like Black Friday too.
Okay. So I'm seeing here your income statement. These are Wall Street estimates in terms of revenue growth. Okay. Single digits, but at least it's steady, consistent during a pandemic where a lot of other smaller retailers are definitely going out of business. Now let's look at the margins, right? Because this is definitely very important. So when I look at your EBIT margin compared to Wall Street consensus, wow. This is thin, less than 4%. When I look at net income, 2.5%, give or take. And then on an EBITDA, wow. So in other words, for every dollar, from a net income perspective, for every dollar that they're generating, they're basically keeping like 2.5 cents.
Mm-hmm. That's exactly correct. It's a quantity and a mass selling business. That's exactly what's keeping them up there in the race.
Yeah, it's very tough for any smaller wholesaler in this space to really compete if they don't have the right inventory assortment, the right merchandise in the aisles and on the floor. Because if your inventory is sitting there for more than 30-40 days, that's cash that you have sitting in the shelves that these guys probably have a lower turnover rate. On average, do you know what is the turnover rate on the inventories that they have in their stores?
If I'm correct, it was like a 30 to 2 difference. So they collect money around 2 days, I think was the average, and they pay their suppliers or whoever they owe them money to in 30 days.
Okay.
Yeah, it's like a 4 to 30 something. Yeah.
So I see it. Okay, so I see it right here on the inventory side. Okay, so about 30 days, 31 days, and then they pay everything out every 30. Okay, so this is good. This should create then a positive working capital in the change where
correct. Sorry. Yeah.
First, and they pay their suppliers later. Okay, very important to have in this industry. Okay, let's look at the valuation with these guys right here. So your comp set, if I compare them to Walmart and Target, which is 1 and 2. Okay, so EBITDA for Walmart almost 6%, Target 8.9. I see EBIT, and then here's Costco. So this is interesting. From an EBITDA and PE multiple perspective, Costco is trading above the industry average. Okay. Mm-hmm. When we look at Walmart and Target, comparing the margins, EBIT and EBITDA, their margins is less. So why are they trading at a higher multiple than Walmart and Target. Total debt over EBITDA, I see here, okay, so they're below the industry. So they have probably less debt than the industry average. Therefore, it's less risky to the shareholders because of the interest expense that the other competitors have to pay out. Is this why the market is paying a premium for Costco? I mean, help me understand this.
Yeah, I think that there are certainly many factors that can be put together to why a Costco it's trading at a higher multiples. But I think again we can see the entire philosophy and the entire concept of, again, going back to these stocks that that are going to survive these times. And yeah, I think in this example that Costco can their value proposition, maybe it's what's keeping them up compared to their peers in that group.
Okay. I would assume also that the total debt or EBITDA, not having a levered balance sheet as much as everyone else in the industry, might be attractive to the market, right? Whereas these other guys, they have to pay a high interest expense before the shareholders get a dividend, right? Before you get reach your net income.
That too. I mean, Costco has been really good at keeping their balance sheet in a healthy and good position. I think that's something that Berkshire Hathaway, which is one of the top shareholders, has been able to really put into the business and really keep them apart from the competition.
So then I will conclude here from my perspective is the strong loyal customer following. Obviously, you said over 90% renew every year, so that's one. Number two, healthier balance sheet than everyone else over here. Okay. And then number three, they're very efficient in managing the business so that they can compete even on a price war with everyone else and still would allow them to survive. And then maybe in the future, as this industry consolidates, they can penetrate or even gain more market share from other customers that maybe Walmart might lose, Target might lose. I'm not sure about Dollar General and Dollar Tree or these other guys.
Yeah, in what they do in their business, their core business, which is selling in bulk and just mass selling, they're kings. I mean, Walmart had to close a significant amount of Sam's Club stores at the beginning of the year, and it's because it's hard to compete against them. It's hard to compete against people who have such thin margins and are doing things so well for so many years.
It is, and I mean. I also see here the revenue growth, the earnings growth. It's less than the industry average, but maybe the market is still giving them a premium because of the cleaner balance sheet. And maybe once we get over this pandemic and we reach some sense of normality, whatever that means, they'll benefit, right? So the next wave of economic growth, they'll probably be one of the ones that will benefit from that. And maybe margins would expand a little bit more from there. I get it. I see that perspective. But I mean, me personally, from my own appetite, I like growth. I like companies that are growing faster than this. But it's interesting.
Yeah, definitely. It's as I said at the beginning of our conversation, the philosophy behind this report and the equity research report is, in times of volatility, go to a safe spot. Go look for companies that can survive things like this.
Okay.
And Costco is a perfect sample.
Okay, so this is comps, DCF. Okay, let's look at your football field and focus a little bit more on this. So I'm noticing your valuation range is between 242 and 406. Your street case, a $400 price target. Your upside case, 550. Downside case, 350. And your recommendation was to buy with a $400 price target. Okay. On point number two, company story. You're saying it's a growth story. How are you coming up with Costco being a growth story? What variables or metrics are you looking at to make the conclusion that they are a growth story?
Yeah, I mean, for growth story, I not only included the financial part of the business, but I also like to look a lot about the operational and their growth in terms of opening new warehouses, growing their e-commerce side, which is really booming at this time, uh, growing membership rates, growing not when I talk about membership rates, it's both the renewal rate and new memberships added to their membership programs. And also, we know that it's a very competitive industry. We know it's an industry with low margins, but they've been able to stay and not you don't, of course, it's not the growth that you'll see in a tech company or any other company that's booming at this time, but they've been able to keep a significant and a steady growth throughout the years. So that's exactly what's behind my reasoning.
I get it. I mean, I get it. For wholesalers, big box retailers, I get it. Obviously, it's not the same type of growth that you will experience from a tech company. Fair enough. I get it. So 400. Let me pull up the chart, right? So from a trading standpoint, when I'm looking at the charts, so there's most recently the stock has been pulling back. Obviously, the stimulus that the government first passed, that's already run out. They're hoping for another stimulus, so that's creating volatility in anticipation to the election. And the overall market is declining. I mean, if we look at the S&P 500, you see, right, in the last 2 weeks, declining, and now it's approaching support. But let's go back to Costco. So is this pullback an opportunity for investors that have a longer term time horizon and are bullish on Costco? Probably. I mean, here, let me zoom out a little bit longer.
That's exactly what I was going to ask you to. I mean,
an uptrend, yeah. So here I'm drawing an uptrend. Okay, longer term. I mean, here's a tiny temporary one. So the way I might see this playing out, provided that your thesis and your analysis is correct and your price target is also reasonable, maybe the stock might come to the first support area. This is support number 1. And then maybe to the second support area. This is support area number 2. And it would even come with these inflection points up here. Resistance. Yeah, I think there's a high probability that it will hit the second support area and then resume its uptrend after the election, after we have a clear winner and maybe a stimulus package is passed. I think that would set in motion all of the pieces for this stock to then maybe reach your 400 price target. What is it, 404, give or take?
Yeah, 400.
400? Okay. Yeah, and then hit 400. So I think the ball is in motion, and the fundamentals, the earnings, the story makes sense. I get it. And of course, look, we could look at the other side and maybe say that this company is overvalued, is a thin margin business. But yeah, even if I look at all of the negatives of the business, when you're comparing it with the other big box retailer, wholesalers like a Costco and Walmart, these guys are going to survive. They're only going to get bigger. And it's just going to be more consolidation at the top. So investors, if they want exposure to this space, there's only a few handful of companies that they can buy. Walmart, Target, Costco, BJ's, and obviously this one has the best balance sheet of them all. And they probably have the strongest loyal customer base. So yeah, I think once we're done with this correction, provided that the trend stay intact, this thing might move higher and it might hit your price target of $400. So I see that scenario happening. I see it.
And even with the drawbacks or the bad parts of the business that you mentioned, I mean, of course, and anytime something that can happen that no one expected. But when you talk about, thin margins and their business model, they feel like that for almost their entire history. So they know how to play the game. They know how to win with very thin margins, and there's really, I don't see any competitor or any other company that's able to do what they are doing right now in that such a positive way,
And just big picture, again, looking at the chart, the trend is your friend. It's in an uptrend, and maybe like I'm saying, the pullback, the recent market sell-off might just give people an opportunity to buy the stock at a lower level. But now we have a story behind it. We have the fundamentals, we have valuation, and we understand the thesis and the emerging trends of people flocking out of major cities and going to the suburbs will just give Costco probably an increase in foot traffic as well once we're done with this whole pandemic situation. And also we saw in one of your slides that the online, their e-commerce sales was up, I think in August, 100%.
100%.
So I can see that. I can see that.
Yeah, another important factor to mention that I didn't mention before is that when we look at the typical family that shops at Costco, their income is actually significantly higher than the typical family that shops at retailers. We're talking about a family income that's close to $100,000, which when we combine it with the current economic environment that we live in right now, actually gives Costco an edge in terms of having a membership pool that's able to keep buying and keep demanding products, even in difficult economic situations like the one we're living right now.
Yeah. And then obviously, if we want to play devil's advocate, here are the risk factors. Worsening of the coronavirus, well, which we're actually seeing. I think there's going to be a second wave, and the numbers in the US are just increasing pretty rapidly. The other thing that we see right here, increasing competitive industry. We know that government regulation, decrease in average purchase cost, okay, and failure to retain, okay.
Yeah, I think we have to look with the pretty close eye the Walmart Plus subscription program. I think that's going to be a big catalyst in terms of other retailers actually getting out their subscription program, their subscription programs. So I think Walmart's Plus success is going to actually shape the industry in a big way. So we have to keep a close eye on that too.
And let me see, I'm trying to pull up right here. Can I get it? No. Yeah, take a look at this. Right. So this is one of the websites that actually tracks coronavirus. I mean, look at the US, India, Brazil, new cases, 30,919. If I click on the US, let's see if it can give us a little bit more information.
Give you a state by state.
Yeah, total deaths, new cases. Which state has the most new cases? Indiana, Minnesota, North Carolina.
Yeah, take a close look at California, which is Costco's main source of revenue.
California?
Yeah. Okay,
so let's see right here. So California, new case as well.
Number 25. Yeah, we're kind of like in the middle.
Yeah, it's nothing has been reported here. So I'm not sure how accurate this data is. I mean, we can have a discount on this and say, like, I'll take this, I'll discount everything here by maybe like 50%. I'm not sure how accurate this data is, but if we do take the total number of coronavirus, I mean, we're just seeing that this is an exponential line to the upside growth. Here's the second wave coming. Oh, now we're past July, and yeah, this is just going to continue to accelerate. That's why most recently there's been other states imposing curfews and even more lockdowns because
in Europe
they're seeing this data. Europe as well. It's a situation.
It's going to be interesting to see how the consumer and the American people are going to react to this second wave. I think it's going to be kind of different than the first one. I think we know more about the virus, but we'll see how it plays out.
Okay. All right. So I think we'll end it here. For those of you that are just watching this again, this is really meant to be education, to teach you more of the due diligence process, the financial analysis that you need to understand in order to do this level of valuation. And also, how do you come up with your price target? And then you create a presentation where we can have a discussion about your recommendation. And I think Julio did a good job in creating this presentation and also sharing with us his understanding of the business, his price target. And again, I mean, Julio, what grade level are you right now?
I just became a junior.
You're a junior, and how old are you, if you don't mind me asking?
I'm 20 years old.
you're 20 years old doing this level of analysis, which with time, you're only just going to improve. You're going to get better. And you're already covering a lot of the principles and disciplines that many professionals on Wall Street with years of experience are already applying. And you're only 20 years old as a junior in college. I mean, the sky's the limit for you, buddy. So great work. I'm proud of
Thank
you.
you so much.
And now, obviously, let's just continue to just get better and improve on what you've developed with the program. And obviously, as we move forward now with Romero Research, where we're going to be exchanging more ideas and potentially giving us potential growth stock pitches that will be shared with everyone else in the community that we have in Romero Mentoring. So again, hats off to you. Good job, buddy.
Definitely. Thank you, Mr. Romero. Thank you so much. I always tell you that I would love to see like a video of me before I started the program and now where I'm right now.
Yeah.
I think that would be amazing because the amount of information that I've gotten and how much I've grown, it's incredible. And thanks to you.
It's always good to see the growth, right? It's always good to see the growth when you first started learning financial modeling to now being able to combine the technicals with the soft skills and then just being able to speak and share your thoughts and explain it. It's just a testament of how much work you've put into this, because this is not easy. So again, hats off to you, buddy. And again, for those of you that are watching, I hope you found value in this. I hope you got to learn a little bit more about Costco as a business, the process, our price target, and then of course, from technical analysis, what might take us on the business and how the recent pullback might just be a learning, a buying opportunity for those longer-term investors in this name. And of course, this is meant for education. I'm not a financial advisor. You should do your own homework. Make sure that you study all of this and make your own decision, because again, we're sharing the level of analysis and research that we put behind our own recommendations. So with that being said, we'll end the session here, and I'll see you in the next one.